Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Wednesday, December 16th. I'm looking forward to spending some time with some of you later on today. We have a webinar that's going to start at 8 o'clock Chicago time, and we're going to be looking at intraday trading opportunities, but we're going to be applying the principles that you and I use here on these longer term charts, these daily charts, and these swing trades. Remember, it's people that make the markets, and the rhythms that we see long term also apply short term. And that's what we're going to be looking at. What are some of the clues that you and I can use to find some opportunity? Now, let's talk about this market. In the NASDAQ market, makes new highs on selling. That's an equal and opposite. As fast as we came up, we came down. That behavior is the same as a shadow, in my opinion. This is all, Dan stuff that you and I are talking about here. But this does imply a market that's gotten high enough to find selling. Today really is a critical day for this market. There's information about there about what the Fed Open Market Committee is going to do today, if they're going to do anything with interest rates, if they should. I really hope they don't. I think it would choke off some of the momentum we're starting to see build here. Inflation's not really an issue right at this point, and we'll find out here shortly. But if we can see some positive movement, today would be the day we'd want to see it. But see, the critical piece here, we need to close above 1820. That's the critical part here. And, can it give us that? Now, in the currencies, by the way, let's talk about something else too, the roll. Last week, contracts were rolling in those stock indices and in these currencies. I was going to have that for you on Monday, but I had a little data problem yesterday, and that's why you did not see that here. You didn't see these March contracts here. But actually, beginning last week, that's when you start seeing that volume shifting between contracts, and that's when the roll occurs. Now, what are we looking for here? We're looking for continued strengthening in the dollar. What you look at here when you see all these red candles is that the dollar is getting stronger, including Mr. Yen. That also backed off a bit. Now, Australian dollars, though, I think is at a spot where we need to be careful. We're looking for further weakness in the euro and the Swiss, but in the Aussie dollar, I think we need to be cautious about being on the short side of this market. Now, it did reach magnitude objective, but we need to see this market continue lower. If it trades back up towards that entry price, we're looking for a push back to the upside. And British pounds, well, right now we're looking for more of the same. This market is waiting for an excuse, and it just hasn't had it. And that's why you're seeing shadows both sides, no consistent form of behavior here. Although there is a benchmark candle, we'd look for lower prices. Canadian dollar the same. If indeed crude oils turn the corner, we would expect a rally here in that market that would be sustainable. Now, let's go over to the interest rate markets. And that's not the interest rate markets, this is. And what we're seeing in the short end of the curve, they're buying the break. The 10 years, this is a false sense of security, potentially bullish. Nothing telling us to abandon a short position. We need to be cautious because of that structure. And the same thing for the bonds. This behavior that we're seeing here is bullish. But again, I would not want to abandon a short position. I want to respect the behavior I'm seeing, and it's got to make a commitment, I think, before I'd want to get into that. But right now, stay short, be cautious, because that has all the bullish trademarks on it. Now, let's take a look at those metals. Gold continues to struggle. They're trying to buy this break, but no follow through. This implies a bullish up day for today's action. I don't know if it's in there enough to do that, but that would be the bias coming into today's session. Same thing for the silver market. It looks like it wants to give us a push back to the upside. And in copper, in the night session here in Asia, Australia time zone, we're seeing that action. A little bit of buying coming in here in that market. The real key, though, is the follow through. This has the right pieces in place to give us an up move in that market. In the energy market, gold, crude oil, that's the big deal here. Has this gotten low enough to actually find buyers? Now, we've been talking for the last few days about a loss of momentum here with these smaller candles, and it looks like buyers finally came back into this market. And that's a positive sign for us. The issue is, can we get some really strong follow through here in the next couple days? And today is going to be important. It's going to set the tone. Natural gas, we are seeing some buyers coming into this market, and the issue is, can we get follow through? This was bearish. I said yesterday this is a bearish pattern, and it is a bearish pattern. And when something is bearish and it fails, it should be dramatic. So that helps give us that stronger push. It's, do we get follow through today in that market? Grains, well, soybeans, Argentina, Brazil had some crop problems with their drought, and that affects global supply. They're the second and third largest producers behind the United States for soybeans, and China is in there buying with both hands. That's the understanding in the marketplace anyways, and what we're looking for is follow through, but we need commitment. There's a lot of selling up here. And I know a lot of people are thinking, okay, thing's going to take off. I don't think it's a layup trade. The action we're seeing here is bearish. The behavior we're thinking about fundamentally is bullish. But it's going to take a lot of work to get above a close above 1070. Corn, the same thing. We're seeing the market slowing down a bit. The bias should be to the upside based on the fundamentals, but we got to be cautious with that. So if you and I are long, nothing telling us to abandon that position, just like in wheat. If you and I are short wheat, nothing telling us to get out. We have not seen consistent follow through here. This is a market waiting for an excuse to do something. And if the dollar continues to get stronger, the feeling is that there may be continued pressure on our product, in this case, wheat. Well, this concludes today's market studies. Looking forward to being with you again tomorrow. And in the meantime, take care.